Yensanity, everyone. That's the new term that a lot of Forex traders have been using to describe the price action in the Japanese yen. And if you are an Equity Guru reader or viewer of our videos, you will recall way back in, I think it was around April, I started talking about the Bank of Japan and why it's the most important central bank to be watching. I even did a chart attack video, which you can check out on our YouTube channel, talking about why it's the most important central bank and explaining the yen sell-off. And as you can see, the yen is continuing to weaken. This is, of course, the US dollar, Japanese yen. Let's go on the monthly chart just so you can sort of see price action going back to the 1990s. And, the Japanese yen is basically at levels that it has not seen since 1990, August of 1990. And I have another target here at around the 160 level on the monthly chart, although there's some interim resistance here around 145. But if it does actually take out 160, we'll talk about that down the road. But there's still a lot more room that the US dollar versus the yen can rise, which is, again, pointing to a weaker yen. Why is this happening? Well, basically, as all central banks, or most Western central banks, of course, we're not really going to talk about Turkey, and we're not really going to talk about China. They're, I guess, in their own case right now. But most, Western central banks, Bank of New Zealand, Australia, Canada, heck, even South Korea, actually, to be honest, the Fed, they're all raising interest rates. Meanwhile, the Bank of Japan has kept rates at negative 0.1%. And even the European Central Bank, who have been negative, even the Swiss, who have been negative, are now back into positive rate territory. But the Bank of Japan is holding firm at negative 0.1%. And of course, the way currencies work is money tends to flow into the higher yielding or higher interest yielding currency, right? So if you're a currency trader, if you go long US dollar against the Japanese yen and you hold that trade, overnight you get paid the interest differential in the currency swap, which makes it very appealing to be long against the Japanese yen right now because it is yielding much lower than all these other currency pairs. So if you are long the yen, long any currency against the yen, so technically you're short the yen, you're making a positive carry trade daily just by holding that trade. So interest rate differentials, money is going to run into the stronger currency. And it's not just the yen weakening, against the US dollar, right? If we take a look at yen against the euro, yen against the British pound, of course, there's been some volatility here, which we'll talk about in just a bit. Canadian loonie versus the yen, the Australian dollar versus the yen, New Zealand dollar versus the yen. The yen's been weakening against, many currencies here. And I have a whole bunch of other yen currencies that, I follow here and trade actually on a daily basis here. But it's quite major because, of course, Japan is, one of the largest saver nations in the world. And the big issue here is, I think personally, Japan also imports a lot too, right? So there's this idea that, yes, a weaker yen is positive because now Japan can export more products. Their products are a bit more appealing. Of course, Japan manufactures a lot, and if the yen is cheaper, it's, a lot of nations will want to buy Japanese products. But I think you sort of have to factor in this whole idea of a global slowdown, which might not increase the purchases of Japanese products. I'm sort of focusing on the import side, and it's not necessarily just the Japanese yen that you have to, consider here. We've seen moves in the euro and also the British pound. You're seeing this with a stronger US dollar. And I think because Japan imports a lot of energy, as you guys know, the petrodollar, energy is traded in US dollars, priced in US dollars. If the dollar gets so expensive, what are the Japanese going to do, right, to import this energy? Are they going to take that big hit by, using more expensive dollars to buy energy? I just think it's something, to keep in mind because it's not just going to impact Japan, it's probably going to impact all these other nations. And a lot of people are talking about this new Plaza Accord, which might come out of this whole currency issue here. So the yen continues to weaken here. what has the Bank of Japan done? You guys know about the bond yield, right? The 10-year JGB. So this happened months ago, where the Bank of Japan said, hey, look, we're going to print unlimited yen in order to buy unlimited 10-year JGBs in order to ensure rates do not go above 0.25% on that 10-year. And this is very important because, as many of you guys know, Japan is the largest owner of US Treasuries. It's not China, it's Japan. And the Japanese investor is also buying, other debt, high-yielding debt around the world. So if Japan does, let's just say, I'm not saying they're going to do it, but if Japan does raise interest rates, I think it would cause a big shock to the bond markets around the world, because now this Japanese money that's been buying foreign debt in the US, might consider coming back to buy domestic JGBs, and that would basically lead to potentially US yields and yields around the world spiking. And, I've talked about that in a previous video. What's important right now is basically the Bank of Japan is doing this currency intervention, right? So they're trying to strengthen the yen. They've done it once, didn't really work. You can see the yen now is stronger than it was before the intervention. And we've heard that just over this weekend, they did an intervention once again. And you can see this here in this price action, where the US dollar Japanese yen was at 151. And then in about 2 hours time, it went down to 145.50. Well, actually, technically 146. And then a couple hours later, we went down to 145.50. So it does seem like the Bank of Japan is doing some sort of currency intervention, which means they will have to sell off foreign reserves of that currency to purchase Japanese yen. And in this case, Japan, again, being the top holder of US Treasuries, are they going to be selling US Treasuries, which is going to cause Treasury yields to spike in order to buy yen, right? That is like sort of the big $1 million question. Of course, there's other ways that they can do it. Perhaps they have a currency swap line with the Federal Reserve. But I think a lot of people are watching the action in the bond markets. And you can see here, even analysts around the world have been saying the same thing, right? The worry is if the Bank of Japan has the cash for intervention now, or will it require the Bank of Japan to sell more treasuries for future interventions? And that's really what's driving the fear right now. And again, Bank of Japan, no one really cared about it because they never really done much in terms of changing interest rate policy. It's always been minus 0.1% for such a long time. But now I think it's time to to focus on the Bank of Japan, because they are quite a key part of the financial system if you want stock markets and real estate prices to stay high, because what the Bank of Japan can do can definitely impact what's going to happen in the interest rate or the bond markets. Going forward, this week we do hear from the Bank of Japan. There is a Bank of Japan interest rate decision. And as I said before, in the past, no one really cared because they never changed things. But now it's getting more interesting, right? Now it's like, okay, what's the Bank of Japan going to do, right? They are already doing the unlimited bond purchasing. They've already tried a currency intervention. Maybe it's going to succeed now. We are seeing another yen strength today. But heading into the Bank of Japan meeting, what else can the Bank of Japan do to strengthen the yen while keeping interest rates down at negative 0.1%? Will they have to sell off more foreign reserves, US Treasuries, which will impact the US bond markets, in order to buy yen to strengthen the yen, right? So a lot of questions here going forward. How can Japan actually strengthen the yen? Well, there's two things people are talking about. One is likely not going to happen, right? And that is, they do start to raise interest rates, but no one's really thinking that's going to happen. The second thing is it requires help from other central banks around the world, and that is that they begin to pivot. That central banks say, hey, we are we're near the end of raising our interest rates in this cycle, and that might bring some more optimism for the Japanese yen, as Kuroda-san at the Bank of Japan, and the Bank of Japan just basically held rates at negative 0.1% And I guess their whole idea of doing so will be rewarded, because now central banks are going to begin to pivot. And if that happens, then money could possibly run back into the Japanese yen. But again, folks, you guys know that pivot story is not necessarily over just yet. I think the markets are really expecting that, but I think we'll have to wait and see what central banks will have to say. But as of now, it does look like the 150 zone on the US dollar Japanese yen is sort of that line in the sand that the Bank of Japan has right now. So I'm just quite curious to see what they're going to say, and if the market's going to buy it, right? If they are going to attempt to do more currency interventions to try to weaken the yen. There might be a bit of a pullback, but I think buyers will probably step in at 145, just like they did step in after the news of a currency intervention. So, what does the Bank of Japan do? That's the $1 million question. And it's interesting times, especially if you are a currency trader, hence the term Yensanity. And, I'm looking forward to it, I guess, just to see what happens here. And I think you can apply this, as I said, not just to the Japanese yen, although, Japan, because they're at negative rates, and they haven't raised interest rates like Europe and the British pound, or the Bank of England, sorry, is sort of in a different case altogether. But that's it for me, folks. If you enjoyed the video, give it a thumbs up. Again, be sure to check out the articles on the yen and my previous video on why the Bank of Japan is the most important central bank to watch, because we've been basically spot on with our analysis here on the Japanese yen, and it has rewarded our viewers who have or who do trade the currency markets. But let me know in the comments below, is the yen going to strengthen? Can the Bank of Japan hold, or will they allow the yen to continue to weaken here going forward? Give the video a thumbs up, and I'll catch you guys all in the next chart attack video.